Welcome back to the Making Sense of Money podcast presented to you by P1FCU, where we tackle all the financial topics that matter the most to you. I'm your host, Tanis, and on today's episode, we are going to be discussing mortgage pre-approvals and pre-qualifications, how they work, why they matter, and how they can help you land your dream home. Who better to help us with this topic than our very own VP of Mortgage Lending, Wes Gossage. Welcome back, Wes.
Thanks for having me.
How are you doing today?
I'm wonderful.
Good. I know last time we talked about first-time homebuyers, what to expect. You kind of touched on some things that I'm going to ask today, but can you go back and kind of tell us a little bit of where your mortgage passion started and the passion for helping people? Where did that start?
Sure. Started with getting out of college, and my first jobs were in consumer finance, and I just worked my way up and just basic, loan officer jobs. But when I got into mortgage, it's just more of a challenge. It's different. It's very engaging with people, and I just enjoyed it. I loved helping people, get into homes, the challenge of figuring those things out. So it just stuck, and I've been in it for a long time.
Awesome. There's nothing like closing day and everybody signs, everything's good, and keys are handed over. That's a good
Everybody's
feeling.
happy.
Yes, absolutely. We hear the terms pre-qualification and pre-approval. Can you explain the main differences between the two? Because they're clearly different.
Yeah, they are definitely different. A big difference. Pre-qualification can be as simple as just a conversation, you and I talking, and you tell me what your income is. I ask you how much down you want to put. We talk about, do you have good credit? I run some numbers, and based on your income, it looks good. But I'm not investigating. I'm not digging in and really questioning what you're telling me, for example, on your income. Is what you're telling me what an underwriter is going to approve you at? So a pre-qualification is just kind of an overview. If you tell me, I'm 5 years on the job, I make X amount of income, I've got this much down to work with, here's my debts, can I afford this house? I can look through that and go, yeah, this looks like it makes sense. That's being pre-qualified. You've talked to someone, but being pre-approved is taking it farther than that. It's really having a deep conversation where I question you, Tanis, tell me about your income. Do you get paid hourly? Do you get paid commission? Do you have expenses? Where's your down payment coming from? You told me you had 50, and then all of a sudden you tell me, well, I'm borrowing it from my parents. And I say, is it a gift? And you say, no, they expect me to repay it. Well, that changes things because I wasn't accounting for that debt. I asked you about your credit. You told me it was good. I pull it. It's not as good as you said. So being pre-approved is actually going farther, going deeper, letting me as a lender or your loan officer look at things, question things, and then we can get with underwriting. We run your credit report, and we can actually say, hey, Tanis, you are pre-approved to buy a home, so I feel comfortable about your income, your assets, and the loan you want to qualify for. Does that make sense?
It really does, yeah. And that's why it matters to have this before you start shopping and, really getting deep in with a realtor or whatever that looks like. This would be important then.
Very important.
So pre-approval letters, that's something you offer, right? You can offer to...
Yeah, for the most part, and I'll tell you this, most people come in and are competent with a pre-qual. They've either done another loan before, they feel good about it.
They know they weren't fibbing.
Yep, they know they weren't fibbing. So a lot of people won't go that extra step. But I do think first-time home buyers, for example, should share as much and ask as many questions and really go deeper.
Absolutely.
So that we can do that. We have some other programs we offer, for example, FHAs and VAs. Because we don't underwrite those here, we really like sending those off for a pre-approval because then we know that it's been reviewed, it's approved, and they issue what's called a VAL or a verified approval letter. That's kind of a common term that's out there, and some people like to know that that's what you have before you go shopping.
Got it. Do most realtors require that, or?
No, they don't require it. A lot of times a pre-qual is okay, depending on your circumstances and as much info as you've given. But it just depends on your circumstance.
Gotcha. So most sellers would probably like to see it obviously, right? I mean,
They would hope you've gone far enough, had your credit approved, and know that your lender's giving you a green light that you can move forward.
got it.
Mm-hmm.
What about some common mistakes someone takes during the pre-approval process? You kind of touched on a little bit,
Mm-hmm.
but
Yeah, I think just, again, asking questions. So a lot of times, surprisingly enough, I don't have people ask us, well, what's an underwriter going to want for that? So you say to me, oh, I'll get a gift from my grandparents. And I say, great. Well, you should probably ask, well, what are my grandparents going to have to do for that? Because your grandparents end up writing you a check. We want to see a copy of it. We got to see it gets deposited into your account. We're having to document it. And so here at the early stages, we're pre-qualing you. We've talked about it. Again, I haven't gone real deep with you because you're not too concerned with it. Well, now your loan gets going and I ask you that, and people get frustrated about the documentation they have to provide. So that's just an example. You know, it's asking questions, really trying to understand what to expect. Mm-hmm. And the more of this you can get reviewed and ask questions, and me as your loan officer, for example, make sure I really understand what Tanis' situation is, what your goals are.
Right.
I can give you the best advice and make sure I'm putting you in the best product.
Yeah. And like a heads up, hey, this is what we're going to need.
Exactly.
And if you can't get that, then
you have time to maybe think about, well,
right.
Because there can be different ways to do it. Maybe it just takes a little more time.
Right. Mm-hmm. Okay. So obviously it's not a one size fits all when it comes to mortgage and loan products out there. Can you explain all the different products that we offer?
Sure. You're exactly right. It's definitely not one size fits all. Our primary loan type we do is conventional. Conventional loans, we can do as little as 3% down. Common's 5% down. A lot of people know that if they put 20% down, they avoid what's called private mortgage insurance. That's the majority of our loans. We also offer jumbo, or is a big loan. Jumbo loans are larger than conforming loan limits. We do those also. We also do FHA loans. FHA loans are really common for not just always first-time home buyers, but your criteria of qualifying. Maybe just at that point you don't want to put that much money down, or maybe there was something that impacted your credit. FHA can be more lenient on credit. We can do VA loans. VA loans are awesome for veterans. 100% financing, no down payment required on purchases. Love helping veterans do those. That's a great product.
That's really awesome.
And then also we do other products, but they're more like buying a land, for example, for building a home. And then we do construction loans.
Awesome. Mm-hmm. Is there any kind of like down payment assistance program that we offer for first-time home buyers?
We partner with the Federal Home Loan Bank of Des Moines, and it does have a down payment assistance or grant program. It's tied to income limits. So we look at the county you're in, look at your income, and if we can qualify you can get grants. Off the top of my head, I'd be winging it, but I believe you can get somewhere around $7,500 if you qualify.
Awesome.
If you come to me in that scenario and you make too much money, doesn't mean you can't get a loan, just means you may not qualify for the grants.
Gotcha. So would you say that you find most first-time home buyers taking advantage of the FHA loans or more in the conventional route?
I would probably still say we do quite a few conventionals. A lot of our members are in pretty good financial shape and they're ready to buy, and they do a 3% down. That's a great option.
Absolutely.
We have some that opt to do the FHA. It just depends on your situation. Yeah. Credit scores, lots of things factor into it. So we want to just make sure we point you towards the best one for you. And a lot of times you might qualify for both, and then we just show them to you so you can decide why there's certain benefits for one versus the other sometimes.
Gosh, how cool is it to have so many options? I mean, that's really something special because, back in, I feel like back in the day, not far back in the day, but most recently, I feel like it was pretty limited. I mean, it has been, the options are a bit more advanced.
We've expanded in the last couple of years, yeah.
Yeah.
And I think it's important for us to get that out so our members know that.
Totally.
Because I would certainly hope members who've been with us for a long time probably heard in the past that maybe a veteran even has called in the past. We told them we couldn't do it.
Right.
And so we want to make sure now we let them know we can help them with these.
Oh, that's awesome.
Yeah.
That's really awesome. Hot topic, interest rates. Everyone wants the lowest one and we're all waiting for them to drop.
Mm-hmm.
But what factors influence the interest rate that someone gets?
Oh, you got all these tough questions. Interest rates, again, the different programs have different interest rates. So conventional versus FHA or versus VA, they can have a little bit of different interest rates. Credit scores can impact them, more so on conventional and jumbo than the government ones, but credit scores have an impact. Obviously, the better your credit is, you tend to know you get a better interest rate. Loan to value is a big thing. I'll give you an example right now. People who want to buy, for example, a second home. It was really common that people used to try to put the least down they could. So say 10% down. Well, right now, if you just do 10% down on a product like that, it really raises the interest rate versus if it was an owner occupied. Mm-hmm. So the best way to help that rate get down is to do 25% down if you can, and it really brings the rate down. So LTV can have an influence on it. So again, it just depends on your situation. We'll show you, and I love it when I have someone who has an amount they say they want to put down, and if you're close, we say, boy, if you can just put this little bit more down, maybe it changes things for you.
Right.
And we all want to pay the least we can in interest, obviously.
And the market too, right? The market plays a huge, that's kind of like the basic level of it all.
Yeah. Rates, that's, boy, we could do a long podcast on rates. But historically, I think sometimes it's hard for people to understand that if you really look at rates on an historic trend, if we're right now ballpark in the mid sixes, that isn't really that bad a rate historically.
Yeah.
It's just we were really spoiled with when we heard rates of 3 and 4 and 5.
The crazy COVID times.
So I think people's new norm, probably, I think they're starting to get a little used to hearing rates a little higher. So,
yeah.
But hopefully we see them come down.
Awesome. Should buyers look for a lower payment or lowest down? What things should they most consider when determining what loan amount, what purchase price to shop for?
I would flip that right back on you.
Yeah.
I would ask you when I'm showing your options, what's important to you? The lowest rate, which might mean higher fees, or the lowest fees, which might mean, and maybe it just depends on how much money you got to work with.
Right.
So maybe we're just trying too hard to get that rate to this lowest rate when you just go ahead and take a little bit higher rate.
Right.
Does that make sense?
Totally. And for most people, I mean, especially in today's world, I think most individuals, especially younger home buyers, they're going to want to pay attention to the payment. Like, I mean, if you have the funds for a down payment, but like you mentioned before, having budgeted for that slush fund for that AC that goes out the first year you're in the home, then I think it would be best to not focus on that so much and then just your payment. But again, it's depending on the borrower.
Yeah. And I think we're at a situation where we need to explain to our members that right now, if you get into a loan, you probably don't want to pay a lot of extra funds to get the rate brought down a little bit.
Right.
Because hopefully rates will go down and maybe someday you can refi it anyways.
Absolutely.
Which would be, you would have wasted your money then.
Right. What a good option that is too. A little bit of a fallback.
Exactly.
You kind of told us a little bit the last time you were here about what you wish you would have known before you bought your first home. Is there anything else other than budgeting properly and making sure you have the funds for all of life's unexpected events?
I don't know that I really focus as much on when I bought my first home over what I've seen and experiences I've seen of people. I think sometimes people are so excited to get into that first home that they sometimes might settle. What I mean by that is it that critical to be in that home now versus if you could wait a year, that might let you afford more home. Instead of buying a 2-bedroom, maybe it was a 3-bedroom.
Right.
Instead of being a house that you had to figure out maybe someday to build a shop, maybe it has a shop. So I just think making sure that what you're buying is going to serve your needs, and that it's not a short window, but that you can actually see yourself there for a while. Because nothing worse than buying a home and wishing you would have waited, or it's not big enough.
Right.
And I know we get excited. Emotions come into play. We're so excited to do it, but it's almost like you take less versus saying, what do I got to do to qualify for more?
Absolutely.
Maybe that means getting some more down payment. Maybe that means working some overtime, saving a little bit harder, paying off some debt. There's lots of things that can impact what you can qualify for then. So I just think, just slow down, make sure it's a house you really love and you're excited about, because you're probably doing a 30-year mortgage, and hopefully you're going to live there for 6-10 years or something.
Yeah. So it's like hard to get one, hard to get out of one.
Yeah. No, people don't like moving usually once they get into homes.
No, absolutely not. So would you say being patient, do you think that would be like the golden advice to our home buyers?
Yeah, that's a good word, but I already come from having some conservatism personally in my own beliefs. So sometimes that's hard for me because some people are aggressive. Yeah. And so with that, I think just make a smart decision, slow down, think about it, really make sure you're comfortable with it and you see yourself being happy and that you felt good about making a good decision. I think that's more so than just not rushing into it, you know?
Slow down.
Exactly.
Absolutely.
I mean, it's hard to get people to understand that there's a lot of actually houses out there if you slow down and will look. Right. You know, if you end up buying a home and then wish you would have lived, I don't know, let's use an example here. You had to have it, you bought it, and then you realize, well, you wish you'd have been in Lewiston instead of Clarkston, or vice versa.
Absolutely.
I mean, just make sure you're happy with the house and where it is, and think about that. Communities, neighborhoods, school districts, whatever. There's lots of things that come into it, you know?
Yeah.
How far away from where you work? I mean, there's just lots of things to factor. So just make a good decision.
Pros and cons list.
There you go. Well, that's a great point.
Yeah.
My wife does this. What are my have-to-haves? What are my wants? And what are my true wishes? And does it check off enough of what you want?
Absolutely. Very important in this process for sure. Do we take walk-ins?
Of course.
At the mortgage?
Of course.
Okay.
Yeah.
And also could schedule an appointment.
Can schedule appointments.
So
we can call in and talk to a loan officer.
Beautiful. Love that. And
you can apply online. We have lots of ways for you to connect with us. Pretty much however you choose to do it, we can usually accommodate.
Awesome. And we have loan officers in what branches? We
have loan officers here in Lewiston at the main mortgage and admin building. I have a loan officer in Clarkston. We've got loan officers in Moscow and Pullman. We have 2 loan officers up in Post Falls. And we have a new loan officer down in Meridian.
Awesome. It's all over the place. But
we're getting there. We're getting there. We're trying to get them spread around so that people coming into our branches and they see that we have mortgage people.
Right.
I think that we'll be able to help more members.
But it all can be done online. So that's great
sure
too.
Can. Yep.
Awesome. Well, great stuff, Wes. Thank you so much. I feel like I feel better about this whole process. So hopefully our listeners do too.
Good.
But I appreciate it. Thank you for being here.
No problem. Thank you.
And thank you to everybody for tuning in. We hope you learned something new today and feel one step closer to making sense of money. Don't forget to subscribe and check out our newsletter at p1fcu.org. We'll see you next time.